Good morning, traders. It's the 26th of January. I'm Joe Neighbour from Signal Centre, talking bull this morning. Hope everybody's doing well. So going to get stuck into headlines today, then take a look at some charts, and then wrap up with the data due out for the day ahead and what's due out for the rest of the week and into next week. So if you've got any requests, any markets that you're looking at that you would like me to take an unbiased approach at trying to tackle from a technical perspective, please feel free to post them up and I'll do my best to cover them. I will go through all of the major asset classes today and do my best to cover as many markets as possible. But if there's anything I missed that you'd like me to take a look at, please feel free to post it up in the stream chats. Okay, let's get into the latest headlines then, shall we? What's been moving markets over the past 24 hours? So first up, the German business confidence improves. The German IFO business confidence index strengthened to 90.2 for January from 88.6 in the previous month, and this was in line with the consensus forecast. There was an unexpected small decline in the current conditions assessment, but this was offset by a significant improvement in the expectations index. The ECB continues to pump out hawkish rhetoric. The ECB Council member Nagel stated that interest rates need to increase further and would not be surprised if hikes continue to rise further after March. And this was backed up by a fellow member as well, stating that rates need to increase at the February and March meetings. We did have some central bank policy action yesterday from the Bank of Canada, and they increased interest rates to 4.5% from 4.25% at the previous meeting. And that's in line with the consensus forecast. The bank also signaled that rates were on hold for now amid expectations that inflation has peaked. The dollar's overall still struggling. It rallied at times on Wednesday, but was unable to hold the gains amid speculation that the Federal Reserve would adopt a less hawkish stance. The relative underperformance of Wall Street stocks also curbed underlying support for the US currency. The dollar index yesterday was close to 9-month lows, but did find some support at that area. So today, major data that we have out is the US GDP number. The first estimates for the fourth quarter GDP will be released later today. Consensus forecasts are for annualized growth of 2.6%. Weak data would trigger fresh recession speculation. So 2.6 is the number that we need to keep an eye out for later. I'll come back to that at the end of the stream as well to put that back in focus. And still the Chinese markets are still closed, but the Hong Kong market is set to reopen today. But the Chinese markets will remain closed for the remainder of the week due to the Lunar New Year holidays. Good morning, Sanadi. Thanks for your message. Let's get into the markets then, shall we? Let's start off with the crypto markets, as we often do. I've got the crypto 10 index that I'm going to take a quick look at first. I spoke about this yesterday. So this is a basket of the 10 biggest cryptocurrencies. So it gives us a bit of an index feel about it. We can then assess kind of where the whole crypto market is moving, certainly those bigger weighted ones. And that can be a bit more of an insight into the larger crypto space. So looking at this, we can see we had a downtrend resistance in place highlighted by this blue line. We then saw some resistance levels forming between 7228 to 7349, and we are slightly above that at the moment. So we did actually close above it yesterday, posting a decent looking engulfing candle, but we haven't really kind of moved impulsively to the upside here to get a really clean break. But we did break out here on Friday, and the pullbacks have been contained by the reverse side of the trend line. So that's quite encouraging, and maybe suggests that we are going to see continued higher prices over the short term. So maybe the markets are looking for this GDP number today, because if that doesn't come in as high as expected, then maybe that will increase the recession fears, at which point Bitcoin, being a risk asset, may take a little bit of a pullback. But of course, if it does come in better than expected, then we may see prices continue to move to the upside. Looking at Bitcoin, we can see here that it broke out through resistance at 21555, really impulsive move higher on that Friday, and prices have remained pretty stable ever since. We haven't really seen any kind of pullback to retest that newly formed support, which ideally I'd be looking for in order to get long. Always want to try and buy on dips if possible, or early on in the breakouts, which obviously we didn't do. So looking for a pullback really towards that 21555 level. Looking at yesterday's price action, we engulfed the previous day's losses. We did make a fairly substantial move higher, but then closed well off of the best levels of the session. But all in all, looking pretty robust and pretty strong on Bitcoin for now. It's down by 0.2% as things stand at the moment. Okay, let's take a look at commodities. Let's move on to gold. Prices continuing to grind higher here, still trading in a really nice short-term uptrend as highlighted here by this blue line. We do have resistance above at 1972 to 1973. That's a 78.6% fib level of this entire move here. So from these highs that we saw back in March last year down to these lows that we posted in September, October. So it'd be interesting to see if at all we get any reaction at that level. Of course, if the trend line also breaks as well, then that may trigger a bit of a corrective move on gold. But all in all, it's looking pretty strong at the moment and continuing to make higher highs, and did so yesterday as well. Silver not quite playing the game. That's underperforming at the moment, down by 0.93% as things stand. Prices trading in a bit of a range at the moment. We looked as though we were going to break that range on Monday when we saw a big move to the downside, but we managed to recover. So potential for a test of the upper end of this range at around 24.30. Above that, we've got resistance fairly close by at 24.89, which is a 78.6% fib level, like that one we saw on gold. So prices range bound here, and when you see these kind of ranges, they can often lead to kind of topping formations. So if we get a clean break through 21.11, then that may trigger a bit of a pullback in silver. But of course, it's going to be linked to what happens with the US dollar, which we'll come on to in a bit. Alternatively, if it does break through that 24.30, my only real concern is that we've got this resistance above at 24.93. So we need to be a bit careful of that. Let's take a look at the oil markets today. So still really watching on oil, Brent oil and crude oil, still trading in bearish channels. We have attempted to try and break through the upper end of this bearish channel but been unsuccessful so far. So the upper end on the Brent chart is at 87.95. And if we can get a break above that and simultaneously break through the resistance level that we've got from these previous highs, then that could trigger further gains towards 97.96. However, if we start to fail here, as we have done on a few occasions previously, then that may trigger a move lower, and we will continue to trade within this sequence of lower highs and lower lows. Similar situation with crude. I've got a bit of a bottom formation drawn on here in the hope that it does eventually break out if you're looking to trade oil from the long side. But again, we are still in a process of forming lower highs and lower lows. So there is potential that we could roll over to the downside here and continue trading within this bearish channel. Alternatively, if we can get a decent break through 83.66, then that kind of puts that channel to bed, takes out a horizontal resistance in the process, and we can start looking for higher prices towards 92.66. So I think the bias probably still on the bearish side for now, unless we can get that clean break above and start maybe moving higher in the short term. Natural gas had a horror day yesterday, the last couple of days really, and this morning we're actually taking out, we've actually achieved that measured move target of the head and shoulders top here. So this is from the head down to the neckline projected lower, and we've nailed that target down by another 2.5% as things stand at the moment. So it should be alleviating the stresses of the energy crisis that we're seeing at present, but these generally takes a while to filter through to the bottom line. But natural gas is moving substantially lower and has been now for a while. And no real signs of reversal. So we'll wait and see how prices form throughout today. Looking heavily oversold. So at some point you'd expect to see some sort of corrective move to the upside, and that one maybe would be capped at around 350. So yeah, still looking pretty sick there on natural gas. Let's finish off with copper, see what that's doing. That's rallied into a 61.8% fib level, and we've got that at 429. Prices not really moving much beyond that at the moment. We have appears to have formed some sort of bottom here on copper. So while we continue to see prices consolidate around here, it does increase the threat maybe of a pullback to test the newly formed support at around 4. So no real big moves to the upside yet. If we look at the price action of the last few days, a lot of kind of indecision here, a lot of doji candles that have formed. Okay, so going to move on to currencies. I also had a request to take a look at the Bund, which I'll try and bring up a chart for that as well. In fact, let's just do that now while we're here. So FGBLH, FGBLH, Bund futures. So looking at the 2023 one. Okay, let's take a look at this, shall we? So Bund, this is the German government debt market, and if we take a look here on the daily, we can see that prices have been quite range bound now for a while. If we take a look at the sort of US 10-year as well, and the UK gilts, we can see that these, it's not letting me annotate these for some reason, I'm not sure why, but yeah, it does, I think, appear as though these markets are starting to bottom out. So potential here for a double bottom formation on the Bund on the daily chart. We've got a bottom here from October, a bottom here from January. So this would be the proposed neckline up at 142.94. So if we can break through that level, see if I can draw on here rather than do the line. So something along those lines there is what we're talking about as a potential double bottom. Looking at it in the short term, you could maybe argue that there's a bit of a channel taking place here with a break lower that could maybe trigger further losses down towards a retest of those lows. But all in all, I do have the opinion that maybe these government debt markets are starting to actually bottom out, and we may actually see higher prices on these and the yields start to lower even further. So a bit no man's land at the minute, to be honest, on the Bund. Saying there that Stop the World on TradingView saying maybe a head and shoulders on the Bund futures. So let's take a look. Are you looking at an intraday charts? Because maybe we could see that somewhere there. Yeah, I can see what you're seeing there. Let's just get rid of these drawings. Again, for some reason, I can't annotate these. It's not letting me draw lines on. So let's go with the very crude drawings that here. So yeah, this would be the neckline, I guess. This would be the left shoulder. This would be the head. This would be the right shoulder. So potentially, if we break through these lows here at 137.70, then that could trigger further losses in the short term. And the way that you'd measure your target or your potential target will be taking a measurement from the highs of the head and shoulders top pattern, the potential one, because it hasn't broken the neckline yet, down to the neckline and project that lower. Let's see if I will be allowed to annotate that on here. Okay, so something along the lines of that. So you take a measurement from the head down to the neckline, project it lower. That suggests prices could maybe get down to 134.39. I also like to use the fib levels to try and get some confluence with those levels as well. And we can actually see that pretty much is bang in line with the 78.6% fib level as well. So a nice bit of confluence there. So if that head and shoulders does indeed go on to complete on the 4-hour chart or the hourly chart, depending on where you're looking at it, then yes, I could see further downside towards those levels. So that's a nice spot there. Very well done. Let's see how that plays out. Okay, going to move on to currencies now, go back to the daily charts and kick off with the dollar index. So prices continuing to grind lower on this. Lower prices yesterday made. That's the lowest close we've seen in some time, actually, going back to these levels that we saw in June last year. We are fast approaching a support level. This is a previous swing low that we posted back in May 2022. And that comes in at 101.29. So fast approaching that level. We may get some support there. I would imagine this market is pretty oversold. I haven't got an RSI on this chart. Let's maybe just add that on. Not that I really need to be told that it's oversold, because I can just see that from looking at the charts. But what I am looking for here is for any signs of divergence. So this is when the oscillators tend to make or tend to start ticking higher, but we're not seeing that in the price. That can often be a very good indicator that prices are very close to bottoming out. So arguably you could say maybe there's a bit of bearish divergence because we are flattening off here on the RSI. If we can compare that to the price, we can see that prices have been continuing to move lower, but we're not necessarily making new lows on the RSI. So we do have an element of divergence there, which may indicate that we're due some sort of bounce fairly soon on the dollar index. So if that does indeed occur, the first price objectives I think would be for a move up to around 103.45 as maybe a short-term correction on the dollar index. Okay, let's take a look at euro US dollar. I will leave the RSI on actually for now because we may come back to that. I don't tend to use it very often, but it can be quite good at times. So we've broken out through this channel, as we know, on the dollar, on euro US dollar. Prices have continued to move aggressively higher throughout the recent weeks and months. We do have an upward trend that's in place. We are fast approaching a 50% fib level as well at 109.42. So I'm interested to see what kind of reaction, if any, we get at this level, because I think we are maybe a little bit overbought here and need to see some sort of pullback. And again, that kind of corresponds with what we're seeing with the US dollar index, in that it's fast approaching that major swing low that we saw on the charts. We are maybe seeing some bullish divergence on the RSI as well. If we take a look here at the RSI, we can see that we are tapping into the 70 level, which indicates that markets are overbought, but markets can remain overbought for significant periods of time. It isn't necessarily a turning point for markets, but we can see here some mild divergence. We made a high on the RSI back in December. That corresponds with this level here on the price chart. Prices have continued to move higher, but the RSI hasn't necessarily gone on to make a higher high. So it indicates that there is potentially some divergence here starting to form on the euro US dollar chart. And we are fast approaching a 50% fib level as well. All in all, it does look pretty bullish, don't get me wrong, but I do think maybe we are due some sort of pullback on this at some point to consolidate some of these gains that we've seen, and then form maybe a base for higher prices over the medium term. Okay, let's take a look at cable. That's into resistance as well. We can see this blue line on the chart has prevented prices from moving higher on multiple occasions in recent weeks. Yesterday, we did post a bit of an engulfing candle, actually engulfing all the previous days' losses, but we're still below this level at 124.30. So unless we can break above that, we may see prices continue to stall in this region, and that then heightens the chances of a pullback. So we've got this GDP number due out today. So that could be a bit of a catalyst. If the number comes in stronger than expected, suggesting that growth is improving, then we may see dollar weaken, because it's generally seen as a safe haven asset. People will then be shunning owning dollars and looking for riskier assets to own, like you could argue sterling, euros, Aussie, New Zealand dollar. All of them will start to move higher, and the dollar will start to move lower. But if that number comes in lower than expected, 2.6 is the number that we're looking for, then that may suggest that recession fears are something that we need to take seriously, and therefore the dollar could gain a bit of traction off the back of that. So it really is quite an important number today. Okay, let's take a look at some of the other markets. Let's take a look at Aussie yen. So the yen markets were looking well, they had some fairly substantial turnarounds yesterday on the daily chart. We can see prices on Aussie yen rallied into a 50% fib level before reversing, but it did close above that resistance at 91.82, and prices are continuing to move higher today. Let's take a look at sterling yen. Not really an awful lot going on here. A lot of indecision on this at the moment, still trading in a bit of a range, upper end of which is around 160-170. So look, see what dollar yen's doing. So that's been trading in a pretty tight bearish channel for a period of time. We did see a close above that on Monday, and so far we haven't gone back into the channel. In fact, the reverse side of the channel has actually provided a bit of support. So potential there maybe for a bit of a kick higher, but again, that would need to see a decent move higher in the US dollar, which at the moment we're not getting. That continues to grind lower. But while it kind of continues to grind lower and we see prices, moving tighter and tighter ranges, that can be when you get big explosions in either direction. And I think maybe to the upside on the US dollar, just because it is quite oversold and we're getting those divergence metrics as well on the RSI. Okay. Let's take a look at euro sterling. This was my gun to the head trade yesterday. Highlighted that it was trading in a range on the daily chart. And the breakdown here that we saw, the big impulsive move lower that we posted on the 17th of January, I looked to trade a retest of that. So the previous level prior to that, the previous low prior to that breakdown level, and it tapped into that level as it often does. So these are really interesting levels that I like to trade. So we've got a short on there personally on the daily setup, but was also looking at this on an intraday basis because it was stalling into that level. And it was quite a nice play yesterday, actually. It was on side 1.41R yesterday, so quite happy with that. Didn't quite get to the target, but You can't win them all, unfortunately. Just going to move on to the indices quickly before I come back to the gun to the head trades. Let's take a look at the European markets. They haven't been doing an awful lot of late, to be totally honest. But looking at Euro Stocks 50, after this kind of minor consolidation, we can see a big reversal yesterday. We did get off to a pretty weak start, but then reversed most of that and now attempting to push higher again. So we've got these previous swing highs on Euro Stocks 50 at that level. I don't know why my charts aren't working today. Maybe need a reset. Very frustrating. Let's see if we can get that drawn on. Yeah, something along those lines. High at 41.97. Let's take a look at DAX. Again, similar kind of situation. Bit of indecision over the last few days, but a really strong reversal yesterday off of the worst levels of the day. We've got resistance around here at 15,274. So if we can break through that, then that would suggest that we're going to see higher prices. We can see here a decent bottoming formation on DAX. Arguably a really large bottom pattern has been formed. So we've got the neckline there, which broke on the first week of January. So maybe a pullback at some point to retest these levels will be in order. But all in all, that looks pretty strong indeed. FTSE 100 has been the outperformer. Have I got the right charts on here? Maybe that's why. Okay, this has been the outperformer for a while. It is pulling back at the moment towards support between 7622 to 7678. So any pullbacks into that region, I think, would represent decent opportunities to buy. As you can see here, it's previous resistance, which should now act as support from a technical perspective, and we should be able to start seeing higher prices. And obviously prices have been moving higher now for a while. And we've got a decent trend line there as well. We've got 3 touch points, so that confirms that that's a trend line, all of which is marrying up roughly with this support level. So that could be a really good opportunity to buy dips on the UK market. So if you want to be on a more granular level, obviously, then start looking into some shares that are outperforming the FTSE 100 and look to try and buy those into a pullback. Okay, let's look at the US market. So still waiting for this to break out. Looks as though we may be there now. It's been trapped within this big downtrend for a long time. But yesterday we did see a pretty strong reversal. It looked as though we were giving up the ghost and prices were moving lower, but I saw a really strong reversal into the close, and now prices are attempting to move higher further, still up by almost 0.5% as things stand. So if we can take out the highs that we posted on Monday, and that high was at 40.40, then we can start looking for higher prices on the S&P, and maybe we have formed some sort of bottom in the short term, and we can start looking for a decent recovery in the S&P 500. So this is obviously the broadest index in the US, 500 stocks as opposed to the Dow Jones, which is only 30, or the Nasdaq, which is only 100 and very tech focused. This is the one that you want to go by if you're going to have belief in the US market starting to turn around. Again, we do have this GDP number out today, so it could be all bets off. If we get a number that comes in weaker than expected, that would maybe set some fears into the market. But from a technical perspective, we are breaking through this downtrend line, which is really encouraging, and maybe we can start looking for higher prices. Let's take a look at the Dow. So got a really crude bottom pattern drawn on here, but this indicates maybe a head and shoulders bottom, this being the left shoulder, this being the head, this being a shallower right shoulder. Need to see a bit of a breakout here. We have broken out through the downtrend line on Dow, but we are stalling in around 34,300. So if we can get a break through these levels, then that indicates that we've got a bottom in place, and we can start looking for higher prices on the Dow Jones, maybe to even go and challenge the previous all-time highs that we posted last January. So it could be setting up for a pretty good move higher in these US markets. Let's take a look at NASDAQ. So this has been the laggard. This has been well behind the S&P 500 and the Dow. Yesterday, we saw a really strong recovery off of the lows, but we haven't broken out of this downtrend just yet. It looks as though we may be in the process of forming a potential triple bottom here on NASDAQ. And if we can break above 12,090, which is this horizontal level here, we'll also take out the downtrend line as well at the same point. So looking for a really impulsive move higher on the Nasdaq, and if we can get that, then that would indicate that we maybe have formed a bottom on Nasdaq, and we can start looking for higher prices on these tech names. We do have earnings season that's upon us as well. We had Tesla numbers out after hours yesterday. Let's have a quick look at that and see how that did. See if I can get a CFD price on it actually, so we can get a an all sessions chart. Let's take a look at that from capital.com. Is that today's price? Yeah, so that's yesterday's. We saw prices have moved well off of the lows that they posted recently. Don't think I've got any reaction there actually. Let's just take a look at that and see if we've got an indication of where prices may be opening. Not really at the moment. I would need to check out some alternative providers there to see how things moved after hours, but there is a downtrend line there. In fact, I'll maybe do this off screen and take a look at IG markets because they offer a all sessions chart. Let's have a quick look, bear with me. Okay, so IG is suggesting that prices are up at 15,253. So they do it slightly different. So 15253, 15253. So somewhere around there. So if prices do open up around that level today, that will have broken out through the downtrend. And looks pretty constructive really, and we can start looking for higher prices from this move lower that started in September. The 38.2% fib level is at 182.79, so that's generally the kind of first level you'll look for on any kind of meaningful correction. So we could see prices get up to that kind of level in the short term, which would be obviously welcome relief given how beaten up that's been in recent weeks. A request there for gold. I have gone through gold already, but let's just go back to that quickly. So my view here on gold, this is the daily chart. Price is moving higher, grinding higher, looking really nice, made new highs yesterday. We are fast approaching a resistance level at 1971 to 1973. So I'd be a little bit concerned in and around these levels. If you are already long, then you may want to consider taking some profits into that zone there. Alternatively, you can watch this uptrend line that we've got on the chart here on the daily. If we get a break below that, then that's likely to trigger a bit of a correction in gold. The other thing you need to keep in mind here is what's going on with the dollar index, because that is approaching support as well at 101.29. We've got a GDP number out today. So that's going to be pivotal as well. So it could be a pretty volatile day for dollar index and for gold. So be a bit careful, but they are approaching key levels, key supports on the dollar index, key resistance on gold. So I think the upside may be limited on gold in the very short term, and I think the downside may be limited on the dollar index in the very short term as well. But I could be wrong. That's just a personal opinion. Okay, that is that then for the indices. Let's move on to the gun to the head trade. So this is where I will pick a trade idea live on the stream, as if I had a gun to my head. What would I trade right now? So Steve and I have been doing this for a good few years now. We were running this on a simulated basis for most of that, but since the start of January, we've actually gone live with this and trading it in a live scenario. We put £2,000 into a trading account with Awanda, and we're trading these ideas directly through TradingView. Each of the ideas that we come up with must have stops and targets, and as a bare minimum, we're looking for risk reward ratios in excess of 2 to 1. We close these ideas out at 9 p.m. UK time, or when the stops or the targets are reached. Just for accounting purposes, we just want to close these trades out, so we've got a fresh account to come into on the next trading day and make a fresh call again. So yesterday had a winning trade on, let's see if we can bring this up, on euro sterling. So at 9 o'clock I was closed out for a £27.31 win. You can see there on the jotter. Let's take a look at the euro sterling chart that I was trading. So let's go back to the intraday. Maximize that. Look at the hourly. Let's get rid of this, shrink this down for now. So this was my trade yesterday. I was selling here, and it's played out quite nicely and looks as though it's continuing to move lower and maybe getting closer to that target. So I still think there's maybe legs in this to trade it. I've probably missed my chance a bit on that because it is fast approaching a support. So let's have a look and see if there's anything else here that floats my boat. Looking at both the dailies and the intraday charts to try and find something that's interesting. Ideally, what I'm looking for on the daily is a market that's into a major resistance or support level. And what I'm looking for on the intraday charts is to maybe see if there's some early signs of a reversal on these markets on a shorter term time frame that I can try and take advantage of. So let's have a quick look through some of these currencies. We are a little bit limited with the gun to the head trades as well, because it's a UK account and we are deemed as retail traders, although Steve and I technically are professionals. We can't trade cryptocurrencies, so we're limited there. And some of the indices, because we've got such a small balance, we can't trade those. So things like Dow Jones, for instance, which can move 300 points in a day or more, we can't take that risk on with such a small account. So some indices we can trade, but they need to have smaller values. Let's take a look here. Nothing there. Or is there? I was looking at maybe trying to get short on some of these New Zealand dollar currencies. That would indicate that I'm looking for a risk off move, which would be positive for the US dollar. So this is the daily chart that I was looking at on New Zealand dollar versus the Swiss franc. Swiss franc is another market that tends to get more attraction or appeal. I know this isn't working because I've got it colored in white for some work I was doing on a dark theme chart yesterday. So I'm going to find a load of lines on my chart later. Okay, so big resistance here, it would appear on the daily. If you kind of cut through the wicks and just look at the upper end of the bodies of the candles, then we can see here there is decent resistance forming. Yesterday we posted a bit of a reversal on the daily, leaving this unfilled level from the level prior to the impulsive move lower. And I always like to try and trade those because I think they offer a decent kind of pullback before maybe a continuation in line with where you've seen that reversal candle. So let's take a look at the intraday charts to see if I can finesse this a little bit. Looking at New Zealand dollar, Swiss franc, you can see maybe a small head and shoulders top pattern has formed here. We've seen a breakdown, we saw a retest, and that looks pretty good for a short-term move lower. So the level I'm looking at is 59.67 on the intraday. So we're not far away from that. So let's give this a go, shall we? Let's sell. I want to sell that. I'm going to put my stop loss above the neckline of this small head and shoulders. This is the candle that kind of confirmed that short-term pattern. So I want to put my stop loss just a little bit above that. I mean, if you want to be even safe, you could go above the right shoulder, but I want to try and maximize my risk reward as much as I possibly can. And in terms of a move lower, so we can look at the measured move of the head and shoulders top. I don't think that will give me a big enough target to make the risk reward great. So we actually have already hit the target of that. That would have only given me a 0.88R return. If we look at an extension of that down to the 61.8, again, that isn't great. So I'm going to have to look for a mega move lower on this, maybe towards this zone here at 58.70, give me a 3.2 risk reward ratio. Let's see if that's a fib level as well, from these swing lows to these swing highs. Yeah, that marries up quite nicely with the 78.6. Let's go with that, giving me a 3-to-1 risk reward ratio. So I'm looking to sell New Zealand dollar, Swiss franc. It's going to switch the symbols. So I'm going to have to draw that all again. I will get this sorted. So we've got the fib level from the low to the high, 78.6. That's my target. Selling at current levels, stop above the breakdown candle, targeting that 78.6, 3.1 as a risk reward ratio. So let's get this on, shall we? Let's sell it. Let's get my take profit on. That's going to be at 58.76, 0.5876. Stop loss is going in at 0.5986. Risk, Steve and I are risking 1% of our capital on these trades. So my risk is in sterling, £19.63. I'm looking for a 3-to-1 risk reward ratio on that. That's sold. We're on. We're live. That's my trade of the day. Going with that. Let's see how that plays out. Okay, day ahead. Let's take a look at what we've got on the calendar. So all eyes really on this US GDP number. That's due out at 1:30 UK time. It's the fourth quarter first reading. We've also got US jobless claims at the same time. All data points are live at the moment when it comes to the Federal Reserve going through monetary policy and assessing the forward guidance on that. In terms of the number that we're looking for, the forecasts are for annualized growth of 2.6%. On the US GDP number. Weak data would trigger fresh recession speculation. So 2.6, if we're coming above that, suggests that recession fears are easing. We may continue to see higher prices on things like the indices. They might start to break out, particularly the NASDAQ. I'd be keeping an eye on. If it comes in weaker than expectation, below 2.6, then we may see indices start to stall, start to sell off. We may see a boost in things like dollar index or the Swiss franc, currencies that are typically viewed as safer havens. And in terms of gold, because it's so linked to the dollar, if we see that move higher in the US dollar, then we may see gold sell off as well. So plenty to be taking from the markets later today. It is going to be volatile, I'd assume, so do be careful and use appropriate risk management. So that's it from me today. Hopefully everybody's enjoyed that. I did have a quick request for Aussie dollar, so let's go and have a look at that, shall we? Don't want to leave anybody waiting. So this will be the final market I go through. Starting looking at the daily chart. So interesting for me on this, that we are trading in a long-term downtrend, but in the shorter term, prices have been moving substantially higher. Now, we have rallied into a 61.8% fib level of this entire move here, which comes in at around 70.92. So I was tempted to maybe sell into that level. We've also got a swing high from here in August. So unless we can close above this level, then if we do close above this level, then that would suggest we may see higher prices. If we do see a move above this level, then a close back below it, then that may indicate that we've reached a bit of a top on Aussie dollar and we may see lower prices. Again, it's linked to what happens with the US dollar. That is oversold. We are seeing some bullish divergence on that as well, and it's into a pretty major support. So these markets have had substantial moves to the upside. We may see a correction at some point. We are into some pretty significant resistance here on the Aussie US dollar chart, but we can't deny the fact that in the short term, it has been moving substantially higher and is very much in bullish mode. So I just think maybe the upside might be a little bit limited here on Aussie US dollar. So do be careful with that. Okay, going to wrap it up there, guys. Any more requests, please come back tomorrow and I'll do my best to get through them. I hope you have a wonderful day and it's a successful one for you on the markets. And we'll speak again tomorrow. Take care. Goodbye.